Hello, I'm Rochelle, and this is episode 139 of the Genuine Realtor Show, which airs every Friday. This week, I'm talking about the CMHC report that is circling socials and media outlets with headlines predicting a 50% drop for home values in Canada. Is the sky actually falling? Let's find out. Well, CMHC has released another report on their stress tests, and the headlines have some homeowners feeling scared and buyers hopeful for a chance to break into the market. Now, if you've been with me for a while, you will know that real estate is hyper-local. So while the Canadian Mortgage and Housing Corporation, or CMHC for short, is a government body that helps insure mortgages that do not have a 20% down payment, they also monitor trends and report on their findings. Some of you may recall from a previous episode that CMHC had released their report on how they thought COVID was going to impact the Canadian housing market. And thankfully, their dire predictions never came to fruition in most Canadian markets. In fact, many markets, including ours here in the Hamilton, Burlington, and surrounding areas, saw record-breaking growth. This recent release has brought headlines that have some people concerned and spurred others to dream big about finally breaking into the real estate market. But let's lay it all out and figure out what it all really means. And while I have you, if you haven't already, please like the video, subscribe, and click the bell to turn on notifications so you never miss an episode. So the title that keeps catching the attention of Canadians nationwide refers to a W-shaped pandemic recovery that could lead to house prices falling by as much as 50%. In this case, due to another wave of COVID affecting the economy. But this was not the point of the report, just the most likely to attract attention and therefore drive traffic to the articles referencing said report. You know, clickbait titles. So with that in mind, what was CMHC actually saying? That a W-shaped recovery without government intervention is the worst case scenario and is pretty unlikely to happen. The other models they ran included a W-shaped recovery with government assistance, which would run closer to a 32% drop, as well as a U-shaped recovery where we gradually pull up and out of the COVID economy with a drop of 34% in prices. If you're in the market for a home right now, don't start celebrating just yet because there are some things to consider. First of all, very few people time the market perfectly, where you buy in the slump and sell in the peak. It's very likely that if you have a home to sell, you will end up buying and selling in very similar markets. Especially in the current heavy sellers market, where ideally you'll find somewhere to buy before you list because there's no guarantee you'll find your next home in time. Though there are options for you, which I will cover in a follow-up episode, so be sure to subscribe and click that bell. Another thing to keep in mind is that inventory is still low. Very low. We're stuck in this difficult holding pattern right now, where people won't list until they find somewhere to buy, and people can't find somewhere to buy because no one will list, and on this goes. So why is there such low inventory here in the Hamilton, Burlington, and surrounding areas? Because people hunkered down through COVID, and unless they had to sell or needed more space, many people who were contemplating a move put on the brakes. Add in the temporary freeze on new builds last year and the continuing exodus from the major city centers, demand for the suburbs and the smaller cities is climbing. Another factor to consider are the historically low interest rates that have increased buying power and helped facilitate this buying frenzy. Add in COVID relief efforts to support Canadians, and many people managed to stay put as insolvencies and bankruptcies are actually lower than predicted. But that also means that a lot of people may not be able to move even if they wanted to. So if you're thinking about selling, don't feel like the sky is falling in our neck of Ontario, but this is certainly an ongoing and ever-evolving market, so if you have any questions, please do reach out. And buyers, take a breath. Don't get too caught up in all of these crazy bidding wars. Take a step back, and if your offer is not competitive, don't offer at all. Because each time you go into a bidding war and don't win, you're actually helping to push those prices up. And that is just perpetuating the climb. Do yourself and every other buyer a favor by connecting with a local to where you are looking realtor you can trust. That is a mouthful, but hear me out. They'll know the market and not have any misconceptions about value. If you're coming from a more expensive city, it feels like your dollar is going so much further, but in reality, you might be overpaying and continuing to perpetuate that climb. Of course, if you are considering a move to the Burlington, Hamilton, and surrounding areas, please reach out. I'm always happy to chat about your real estate goals. Thanks so much for watching. Until next week, keep it genuine.